Hi, everyone. Welcome to the Finance Fight Club podcast. Today, I'm going to talk to you about why revenue is not as big of a deal as you think. One of the things that I see a lot when I work with clients is they're so focused on revenue that they kind of forget the rest of the business. And so I kind of want to talk about that a little bit today. In a former life, I one time managed $1 billion grant, and that sounded so exciting, but it was really just a couple emails and meetings, and it wasn't that interesting. And then in another life, I managed $1 billion P&L. And it sounds so cool when you say it. You're like, oh, I've managed $1 billion. But the reality was it was all volume based. So if sales went up and down, then our P&L cost center went up and down. And there weren't a lot of wiggle room things that you could do creatively with either of those $1 billion grant or the P&L. It was much more exciting to deploy $34 million of grant funding. And I actually find it even more exciting to help small business owners that are anywhere from 100K to 5 million to 10 million, because you can do so many creative things with less dollars. But today I really want to focus in on a very particular example of a business, very simple. And I want to show you the story arc over 4 years of what this business did and why revenue actually doesn't show that the business is successful or not successful. Now, yes, it goes up and down, but there are other things that you might be missing in your business. So if you are listening to this, I'm going to share all these numbers. But if you're watching it, you actually get to see what I'm going to share. So I'm going to turn on that thing and we're going to go through it. Okay. We are sharing this screen. I'm going to scroll up a little bit. This business started in just the beginning of 2021. So we have a full 4 years of data, which is really interesting. If you're under 4 or 5 years, you might actually not have enough data to know if you're meeting your goals. Maybe you do, maybe you don't. But it's really nice when you have a chunk of years to go back and look at. So if you're like year 2 and you're like, I got to call it quits, maybe give yourself another 2 years before you decide to do that. Now, for those of you that are just listening, what I'm going to do is just kind of share this and hopefully get all the numbers. But I really recommend you go back and watch it because we're actually going to go through each little piece. So to start, this business started in 2021. Their revenue was $53,000. Now, it wasn't a full year, so maybe it was half a year or 3/4 of a year. And then in 2022, the revenue was 162,000, 23, 141,000, and then 2024 ended with 107. Now, in my finance eyes, 140 to 170 are kind of almost the same number. I wouldn't actually put a lot of stock into, did you go up and down by $20,000 or $30,000? Now, percentage-wise, if you're looking at this, you'll see that 2021 to 2022 was 200% growth, and that looks absolutely amazing. And then 2022 to 2023 was negative 14% growth. So they actually lost 13% of their revenue. Sorry. That looks terrible if you were just looking at those percent numbers, but really they're kind of flat. Like 162 to 140 is like, maybe it's one client, maybe it's one product, maybe you missed your sales target by one. It's not actually that interesting. And then you'll see that 2023 to 2024 went up by 21%. Again, that sounds great. 21% growth year over year is like, woo, amazing. But is it? Not really. Again, that could be one or two clients. It could have been, wow, they figured out the sales process, or they just got some great leads. So let me back up and say that's the revenue. This is a service-based business. This is a business that's been a little bit solopreneur, trying to build an agency and kind of figuring out what steps needed to be taken. We're going to go down a little bit lower, and I'm not really going to talk about this too much, and I'm going to come back to it, but we have non-owner labor. So I split this out and cleaned this up in a way that made sense to show what I want to talk about at the end. Non-owner labor is really important to look at. So you, as a business owner, you often are the labor of your business. And if you are, then you need to really be tracking your compensation. We're going to get to that in a second. But you need to separately track your non-owner labor. And so for this, in 2021, there was no non-owner labor. 2022 was just $23,000. 2023 was $31,000. And 2024 was just under 9. So you can see it went 0, up a little, up a lot, down a lot. And we're going to talk about that a little bit. And then you'll see total owner compensation and benefits. Now, for the sake of this, I want to point out that 2021, 2022, this business was an LLC. 23 and 24, it switched to an S Corp. I have smoothed this over. So if you're looking at a P&L and you've switched to an LLC and an S Corp, you have to go back through and clean up your owner compensation. You're not going to see all of the information in your P&L because owner's draws go on your balance sheet, not on your P&L. And so you might be like, wow, I have a huge net income, but then you pulled a bunch of money out of your business. So for the sake of this example, I went through and cleaned all that up and made it pretty clean. Now, you're also not going to see in 2022, those owner that $120,000 of owner's benefit probably doesn't include rent. So that would have been taken off the taxes at the end. And then in 2024, rent was an expense of the business, but I've moved it into owner's pay. So you can kind of compare, did the money more efficiently get made for that owner? So I'm going to talk about that for those that are not watching. 2021, the owner took out $39,000 of compensation off of $53,000 of revenue. That's pretty great. And in 2022, the owner took $120,000 out of the business off of a revenue of 162. On 2023, the owner took $73,000 off of a revenue of 141. And in 2024, the owner took just under $120,000 off of a revenue of 170. And then there's some other expenses in there. So I'm going to ignore that. You can look at it if you're watching the video. There's some expenses. They are what they are. Interesting as I totaled this up. So the true cost of running the business for 2021, if you are an owner and you are the labor in this scenario, was $45,000 off of a revenue of 53. In 2022 is $165 off of a revenue of 162. In 2023 was 141,000 off of a revenue of 141,000. And in 2024 was 152,000 total cost of running the business off of a revenue of 170,000. Now, I just threw a lot of numbers at you. Hopefully you can follow along here. But my point is that if there's 2 points to this whole podcast episode, but one is your owner compensation matters. And so I threw everything in here as owner comp as the true cost of running the business. Because to be honest, $120,000 salary is not a ton. Sometimes it's a lot, sometimes it's not a lot. So it looks like this owner is probably not actually even making that much money, but they're pulling out a lot from the business. And then I made a profit line, which profit, talk about in a whole nother episode about what profit is and why profit's not real. But in this sense, what I did, and you wouldn't see this on a P&L, is that I took your gross revenue, the true cost of running the business, so that non-owner labor, what the owner was benefiting from the business, and then the other expenses and cost of goods sold, and deducted that. In that, if we're comparing that number, which I put in quotes as profit because it's not a real number on a P&L. It can be a lot of different things. It can be EBITDA, it can be net income, it can be seller discretionary earnings. You can get more into that in another episode. But if we're looking at that number, 2021, the profit of the business was $8,700. In 2022, it was negative $3,000. 2023, it was negative $300, so almost break even. And in 2024, it was $18,000. And so I just want to show you that's actually really important to look at. So if you look at, we talked about revenue is from 2022 to 2024 is relatively flat. In 2022 and 2023, I would say expenses were relatively flat and the business broke even, the profit close enough, right? You could say, I think you could argue this is a cash-based P&L. So you could argue that $3,000 was really expenses for 2023, or maybe the end of 2023, those were expenses for 2024. I wouldn't argue this is like that bad. It's not great. It's not that bad. Likely it was cash flow. And then I want to talk about this. So if I'm looking at this and I'm saying, is this a healthy business or not a healthy business? I don't really know because it could be healthy. I think if you are a business owner and you're making 170,000 and you're taking 120 out of your business, that's pretty healthy, dependent, right? But you can't really tell. And so I looked at a couple of more things. I dug a little deeper into this and wanted to play around with it. So one thing I noticed, and I'm sure you noticed it too, owner's comp dipped quite a bit in 2023. So let's look at why that might have happened. And down below, I have owner's comp as percent of revenue. So from 21 and 22, it's 73, 74%. 23, it dips to 52%, and then 2024, it's back to 70. That's super interesting. That's something that you might, if your goal is to optimize for your compensation, you want to track that and you want to set a KPI related to your owner's compensation and say it's not going to dip below this amount. And if it does, we're going to make trade-offs with other expenses. And then I want to talk about why that might have happened. So the reason I think this happened was if you look, if you kind of follow along while I'm listening, is I looked at 3 big expense buckets for this business. So COGS software, marketing and sales as a percent of revenue, and professional development as a percent of revenue. And in 2021, there was no software, so that was 0%. Marketing and sales was around 3%, so not a lot. Professional development was 0. 2022, all of those numbers were 1.8%. In 2023, there's a software cost that goes up. Marketing and sales goes up to 4.3%, and professional development went up to 12%. So, what happened was this owner went and hired a really expensive coach. So you could add that to the 73K, probably get it up to 90,000. You could play around with that and say, okay, well, they chose not to take that income and they chose to put it for professional development. Realistically, they probably did really well in 2023, just reallocated those dollars. And then you'll see in 2024, there was some correction there. So there was more sales and marketing expense, no professional development, and then less COG software as percent of revenue because of some shifting priorities. But I want to get to the meat of this. So that's the general overview of 4 years of business and what you could look at in your financial projections. But you usually need a non-financial KPI to really know if you're on track to then tie to your financials. And for this business, there's one that is so interesting that I just want to talk about because the revenue, you can't really tell if this business is on track. But if you look at average billable rate per hour over the course of 4 years, you'll notice, and I'm going to tell you what those are for those that are listening, some big shifts. So in 2021, the average billable rate was $224 an hour. In 2022, it's $224 an hour. In 2023, it was $320 an hour. And then in 2024, it was $727 an hour. No, those are massive increases in your average billable rate per hour. Now, this business does not charge hourly. I think it started charging hourly when it first launched and switched to value-based pricing and then created a lot of efficiencies in the way they deliver their product and service. And so you can see that really in 2024, revenue didn't go up significantly, but our average billable rate per hour went up so much that they are on track if they get the sales in to make a huge amount of profit and huge margins and be able to reallocate those costs. So the point of this is that, yeah, revenue is interesting and it's a part of your business. But if you're missing what drives efficiency in your business or what your goals are, so your owner compensation, or if you're looking to sell your business, what metrics are going to be looked at when you go to sell your business, you're missing most of your financial picture. Last, I just want to say this. So average billable rate per hour works for this particular business, but it may not work for yours. So a couple others that you can look at to show your efficiency of revenue is your revenue per employee. If you have a big team, that's a good one. You can look at your revenue per labor hour. That's very similar to this. But you don't have to use hours, but it's a really easy metric when you're a service-based or have a large team that's delivering product. And there's lots of other ones, but I just want to say, focus on that. Don't ignore revenue, but don't only focus on revenue. If you have any questions, shoot us an email, follow us on our blog, our Instagram, our LinkedIn. All those links will be in the comments. And thanks for watching.